Welcome to Invest. We talk about investing, finance, and professional development. At the current time of exactly 10:30 a.m. on Eastern Time on Christmas Eve, Ethereum $100,218, about 0.15% so far. On the over crypto market, as expected during this festive weekend, we are relatively flat, not really moving up or down, just across the spectrum, down or up about 0.2% so far. On the equity side, we did end on a relatively positive note. As you know, typically, we are just consolidating, not really doing much, around the festive holiday time period. Obviously, this year, the bullish rally or the Santa Claus rally that we were expecting has been mitigated due to several different factors. One is with respect to recessionary type of foreshadow on 2023, basically indicating that we might see more, worsening dynamics, on the economical front, meaning that a lot of stocks are still gonna get a discounted level going forward as we shift on to a new year. So people are a little bit more wary and, pull back a little bit more in terms of their buying pressure. And this is applicable to both retail investors and the corporate institutional investors. We ultimately still need to get the guidance and the efficacies, and the verbiage specifically coming from the Feds on how is the rates hike, we've been performing for the last 5 consecutive times so far, right? And just to take a look at on the relative perspective, right, 75 basis point on the first one, the second one, the third one, the fourth one, and then the recent one we have toned down to a 50 basis point. But with respect to the media front, we are still thinking that recession might be happening in 2023. At this point, it's more of a speculations, but the speculations has been kind of lingering on since, announcement coming from J.P. Morgan. And also subsequent to that, Goldman Sachs has also made a plan to reduce their workforce starting in January and February in 2023, indicating that a worsening economy might be happening, which, with that being said, is further, dampen the buying pressure among investors in all spectrum. In addition to that, obviously the FTX news that we have been hearing so far does not really propel, specifically the crypto market. It further dampens the circulatory dynamics of demand within cryptocurrencies. So, seems like we still need to kind of figure a couple of things out, right? The Fed, how's the efficacy with the rate hike? Are we going to go with 50 basis point again or 25 basis point? Are we going to keep sliding down the cliff from here? What's the tax implications that we should be ideally seeing from fund managers, but also for retail investors? Obviously, we will learn more from, in our February meetings with the Fed's FOMC meeting. And with respect to the COVID situation, seems like it's still kind of peaking in China. So that's more of like the third, tier level of, macro factor we still need to consider. But collectively, I would say the three factors are still quite negative, right? The Fed's interest rate hikes, recession, the FTX debacle that we've experienced collectively, and with respect to the COVID situation. And now, with respect to just, more regionally, in the U.S., seems like there's been some snowstorm and freezing temperature that's happening domestically across, the whole U.S. It seems like we are again, getting record low numbers on regional temperatures. It seems like, just as of yesterday, I saw this news report saying that the temperature, throughout the day has dropped by at least 30% within just one day. It went from, and I'm talking about this in the Celsius perspective. So apologies if you don't know what I'm talking about. So 0 degrees is technically in Celsius is freezing temperature. And they have dropped from 0 to negative 15 degrees within just a couple hours. And I experienced this in firsthand in New York City. Like yesterday, during the day, it was relatively warm. I would say it wasn't too difficult for us to walk around. But as it gets towards like nighttime, around like 6 p.m., and shifting onto the night, it dropped significantly to like from 1 degree Celsius all the way down to -15, -20 degrees, even in selective region in New York City. So it's quite interesting. So before we dive into it on the technical front, let's just take a look at what's going on with the whales as of closing on this past closing day. So let's take a look together. So it seems like with respect to BlackRock, it was a relatively neutral day. We definitely have more of a mixed day, so nothing really driving in one direction. Take a look at ARK Invest as well. So ARK Invest seems like it was relatively more of a sell day than a buy day. It's just consolidating, I would say, in my opinion, not really driving in one direction, but obviously they have to kind of do some normalization for themselves. And then take a look at the news front again, right? Everybody's screaming recession's coming 2023, but ultimately the technical has to check out, right? So we'll dive into the technical to foresee what will ideally look like, in 2023. And on a recent time frame, seems like the U.S. House Representative has passed a $1.7 trillion bill to fund government through September, sending it to Biden. Obviously, the $1.7 trillion, who's going to be paying for it? We are going to be paying for it collectively. That means that the interest hikes will continue to rise because the government just keep printing money. The $1.7 trillion doesn't come from thin air, right? Yes, they do talk to the Feds to print more money, but it just means that we are printing it out of depreciating the US dollar. But eventually, we will have to try to appreciate the US dollar back into the normal level that we initially started with. And that means we will have to pay a higher tax, interest rate will be higher, right? It's like a kind of a balance effect, right? So if one side goes up, the other side has to come up, right? So now we are basically depleting $1.7 trillion out of our market. And eventually by September, after September, right, we will have to eventually pay for this. So this is more of an incremental, progressive shift of dollars that we're doing this again. And obviously with respect to the COVID situation, we're still paying for it. So now it seems like we're digging a bigger hole for ourselves. So that's not good, right? And then with respect to some other news, like Tesla suspends production in Shanghai plants. So that will obviously dampen the Tesla stocks. And the crypto investor outlook in 2023, I would say that's speculation. So let's just take a look at the technical in a bit. TikTok ban on government devices under spending bills passed by Congress. Things like this. So all the other ones are trivial news, but yeah, this one is pretty important. Like FedEx and UPS warn storm could delay holidays package. Airline cancels thousands of flights. So it is what it is. So let's just take a look at the technicals together with respect to recording time of 10:38 a.m. on the Eastern time. We are a day away from Christmas. Merry Christmas Eve to everyone. We are at 12.18, down 0.12%. Again, we are still just lingering between the 1250 versus 1230, 1300, sorry. And on the daily, you can see that we are still fusing together, not really moving much up or down. Daily looks like it's about to kind of cross up, but the cross up will be quite minimal. Maybe just trying to touch, just before the 1250 mark. But that's about it because of the lack thereof in terms of bullish pressure coming from the weekly front. The monthly, it is looking quite consolidated, so it's not terrible. Okay. On the Bitcoin side of the equation, at 16,840, up 0.36%. Monthly, it is looking to cross up eventually, but this is going to be away, like months away. The weekly, it is looking to cross down. We are in this like consolidated mode, not really doing up or down. We're still at 16,500, which logically speaking makes sense because it's a technical level. On a daily, it is quite stale, just fusing together, not really up or down. So I don't foresee any major movements until much later down, months, weeks away from here. So take a look at the equity side, shall we? On the SPY front will give us a good indicator. So again, with respect to the weekly, it is still looking quite dampened. You can see that we're about to form a death cross, which we kind of need to, with the 47 out of 70 coming down to 44, coming down to 36 would be very ideal. On the daily front, you are looking to kind of cross up eventually. So, but in terms of the cross up, how significant will this be? I would say not the most, you know, not a dramatic one, but it will come up to a logical level just because it needs to go through that course of cadence. It doesn't just go up in one shot or go down in one shot. It needs to kind of oscillate from here. So what I foresee is that we are just basically incrementally form this reverse head and shoulder pattern with this head, with this shoulder. So we're forming this secondary shoulder right now. Eventually, we will, oscillate to the point where the whole chart will be aligned daily, weekly, and monthly. And then as the monthly get, confirmed, and we ideally bounce from the 43 out of 70, so we technically still have some room to go down to, we will eventually continue on the bullish momentum, which I think, based on the technical front, ideally sometimes in like June, July of next year, which can be impossibility. Okay. So it's a festive day, so appreciate you for hopping on a call with me, despite, you should be spending time with your family. But let me know how it goes, right? I will see if I can check in with you guys tomorrow. I try to tone down, on the workload. I do have a meeting today, despite today is a Christmas Eve, from 8 to 10 a.m. Pacific time. So in like 15 minutes from now. But I appreciate you for your diligence and your hard work. It's been a crazy year so far, but Merry Christmas, and obviously Happy Kwanzaa, Happy Hanukkah, and all the festive time for you guys. Have a safe time with your family and your loved ones, and I care about you. I appreciate you. You guys are my family, and have a good one. Take care.